Hi everyone, welcome to today's video. So let me start out the video by telling a very small anecdote and tell me in the comment section if you agree with this. When you start out as a retail investor in the stock market, people generally say that finance industry is going to grow. Invest in it. Similarly, FMCG industry is going to grow. Invest in it. There is this new industry coming up, invest in that. You will make mad money in it. Does this happen or does this not happen? Now, the problem is that almost every industry is growing. Tell me like a few industries that are not growing, you will have a hard time thinking about those type of industries. And there are literally handful of industries that are not growing, right? So that's the honest point around that. So it becomes very important for you as a retail investor to be sensible in terms of understanding what is actual or real growth versus what is fake growth. Because if you can understand this simple concept and invest in actual real growth type of industries, you will make insane money. Point number two, what I'm going to do on today's video is that I'm going to talk about one such industry that I feel is exhibiting real growth, and I will show you the best way in which I'm investing in it, because this is a highly complex industry. Even I don't understand it much, but I've figured out a very interesting way of investing in it. So I'll discuss that with you and show you a live investment clip also. So let us first and foremost understand what is the difference between fake growth and real growth. And for this, let us go to an example and an anecdote about Juicero. So it's a company in the US, or it was a company in the US that started launching machines like these. So these machines look like that they have been manufactured by Apple. So really high-end looking machines. And what these machines used to do was that these machines used to give out cold pressed juice. For example, if you want to have carrot juice, or if you want to have Karela juice, and if you wanted to have like Loki Tinde Turai juice and all that stuff, I don't know who would be drinking it, but some people might love it. So what the company did was that they used to manufacture packets like these. And you as a customer would have to just stick this packet into this machine and you would get the juice of that particular fruit or vegetable. So that was the simple concept, but let us go to Wikipedia. And there is a very important point that I'm trying to outline here. So bear with this madness, right? So let us very quickly read through paragraph 1. So Juicero was an American company that designed and manufactured the juice press, a fruit and vegetable juicer. The Juicero press was a Wi-Fi connected juicer that used proprietary single serving packets of pre-juiced fruits and vegetables that were sold exclusively by company subscription. Okay, already a super complex business model. Now, what is the message that I want to deliver here? The message is fairly simple, that in order to identify the difference between real growth and fake growth, use the concept of first principles. I'd make a separate video on how Elon Musk thinks. Super important video. Please go and watch it. I have explained first principles in detail, but I'll give you a very quick rehash. So first principles in simple terms means that you are looking at the basic fundamental truth behind anything that you are analyzing. For example, the fundamental truth of this company is that it is helping you make juice. That's it. Now my mom can buy a 300 rupee juicer and it gives me the juice of that particular thing. That's it. I'm not saying that Juicero was completely bad. It ended up raising $120 million. $120 million. 1000 crore company almost. And fundamentally speaking, by using first principles, what was the company trying to do? It was, in simple terms, was helping customers make juice at home. That's it. That was the entire philosophy about it, that you know what, we are sourcing from here, there, organic stuff, this, that. But at the end of the day, it was just a glorified juicer and the company failed. That was the basics behind it. First principle thinking allows us to think about a particular industry, a product or a company. What specific problem are you solving at core? If you take all the bells and whistles away, what exactly are you doing? Just tell us in simple words. That is the basic concept behind first principles. Now let us juxtapose this fake growth of Juicero with an actual growth industry, which I would like to discuss on today's video. The industry that I want to speak about with you today is genomics. Now, just a very quick high-level overview of what genomics is. I'm not an expert in this, I'm not a doctor, but to give you a general sense, what is genomics is very much highlighted by this paragraph. So genomics is an interdisciplinary field of biology focused on structural, functional, evolution, mapping, and editing of genomes. So as humans, we all have genes, and our genes have certain defects. By genes, I don't mean the genes that we have, but the human sequencing DNA type of genes that I'm speaking about. So if we apply the concept of first principle to the industry of genomics, what is it that you can be sure of? So let us break it down. So we as humans have diseases. Many of these diseases are caused due to bad genes. Some of us have diabetes despite living very healthy lifestyle, eating right, exercising, whatnot. Why do we have it? Because probably some gene defect in our body that we got from our ancestors, and people will pay insane amount of money to cure these diseases and not get these diseases in the first place. So there are a bunch of techniques associated with genomics. For example, there is a technique called as CRISPR technology. Now I'm just simplifying everything for you in a layman's language. So CRISPR in simple terms means that they will study your DNA sequencing and they will cut or edit certain parts of these genes so that you don't get a disease. So I'm oversimplifying it. Some of the technicalities might not be correct, but it's a highly complex space. For me as an investor, in order to make money, I just need to understand it from a high level. So I'm just explaining you the high level analysis of this industry. So to cut the long story short, if we understand genomics from a first principles point of view, number one, do we have diseases? Yes. Number two, do we have diseases because of genes? Yes. Number three, if we edit gene and incorporate a bunch of techniques around it, can we save people from having these diseases, and will people pay for these type of services? The answer is yes. So according to first principles, this industry has real potential. Now compare this to Juicero. You need juice. My mom can order like some random juicer and she can make Loki Durate Inde juice very easily at home. She does not need to buy this Juicero machine which costed at its peak at like $700-800. It's madness. Now you would say, Akshat, there is a subset of rich people who would pay for this. Yes, those subset of rich people would not necessarily buy these type of juicers. They have house help at home. So you are starting out with such a small market, and on top of that, you are just targeting super rich customers. So probably that machine at its very core was not solving any real issue. And that is the reason why company got shut. Because eventually people realize that, hey, you can just press these juice packets with your hand itself. You don't need to spend $700 on this machine. And the company shut despite raising $120 million in funding. So the first key thing in terms of betting on an industry is that you must understand the difference between real growth and fake growth. Now, second key thing that you need to do is that you need to question that growth. Because many a times you would hear that, you know what, finance will grow by like 50% per year CAGR, crypto will grow at 150% per year in CAGR, this industry will grow at 300% per year in CAGR. May be true, may not be true. So you need to do a little bit of analysis there. So let me first and foremost show you the genomic market report scope. So this is the report, and here it predicts that the current market size is $23.5 billion and the revenue forecast for 2028 in terms of genomics is roughly $63 billion, and the industry will show a CAGR of 15.35%. Now, anytime you see the industry growth rate to be more than 10%, you should be skeptical and you should try to get a sense that, hey, you know what, am I being duped or is there real potential in this industry? So now everyone will have their own methodologies of doing these analyses and coming out with their own estimate and growth forecast. So we can't question that. And honestly, we ourselves can't build these forecasts. But there is a very good method that I would like to tell you. The method that I personally use is that I look at the fact that if a product, a company, or an industry is reshaping something, or is it just simply improving something? So let me elaborate on this point by talking about a very specific example of electronics. So let's say that right now iPhone 13 has been launched and next year iPhone 14 will be launched. Now, is that an improvement or is that reshaping of the industry? Because no matter what features iPhone 14 has, it will be good. Some features will be revolutionary, but it's not as if that it is disrupting the mobile phone industry altogether. That will not happen because most likely iPhone 14 is going to be a process improvement. Maybe the computing power will improve or the size will improve or they will launch some shiny screen around it and jack up the prices. That's a different debate altogether. But the point is that iPhone 14 is simply going to be a process improvement. That's it. Nothing revolutionary about it. On the flip side, if you have wearables and if you move to the next generation of wearables, for example, instead of owning an iPhone, you just wear a watch and you can do everything that a phone can do on that watch. It has already started happening, but let's also imagine that we are in the metaverse. You just need a watch to access it rather than wearing those bulky Oculus. So such improvements become reshaping of the industry. For example, I'm a big supporter of cryptos because of the fact that, hey, this is revolutionizing the way how we have interacted with money. This is not just simple improvement in fintech. For example, if PayPal is charging you 5% and you come up with a product that charges 4%, that's a process improvement. That's not revolution. But revolution is that you're literally solving the most critical problem with the money itself, which is that it becomes high inflationary. And some good cryptos are solving it. Therefore, it's a revolution. Again, not an investment advice. I'm just giving you example to help you understand what the difference between process improvement and revolution is. So to that end, whenever I find an industry which is growing at more than 10 to 12%, I just simply ask myself a question that, hey, is this a process improvement or is there a revolution at play? So according to me, genomics is one such industry where there is a revolution at play. Why? Because compare it from a pharma industry. For example, if you have a family member who is suffering from diabetes, you would know that people can only manage diabetes, they can't really cure diabetes. But by using genomics, if you can cure diabetes, that becomes magical. Same goes for cancer. If you can detect cancer at a very early stage, change DNA sequencing, and if you can prevent cancer from happening, that's a revolution in itself. And genomics is making all that possible. All right, so this brings us to the third step. Number one, if you understood the difference between real and fake growth. Number two, you actually understood the potential of the industry. Then how do you make money out of it? So first and foremost, majority of the new age innovations can get super complex. For example, I understand the crypto space really well. Tech is something that I'm comfortable with, but medicine or healthcare is something that I'm not super comfortable with. That is not my area of expertise per se. I, as an investor, will figure out the easiest way of making investments in it. So I will educate myself from the perspective of what genomics is, just develop a high level viewpoint on it and figure out the easiest way I can make investments in it. Now, it doesn't make sense for me to go and directly buy stocks, but there are some basic points that I can be sure of. First and foremost, I'm sure of the fact that this genomic revolution is happening outside India first. It's happening predominantly in Europe and the US, more specifically in the US, because genomics requires a lot of R&D money, and that money flows in the Western countries compared to Indian countries. Again, not trying to stir up the patriotic sentiments here, but this is a basic fact. Majority of the high-end tech healthcare revolution first happens in Europe and US. So from that perspective, if I'm looking to make investments in the genomic space, I will first go and invest in the US or Europe. Number two, will I be able to pick specific companies if I'm not 100% sure about the industry? The answer is no. That is a super risky strategy for me and I can go wrong. So a better approach for me is to do an ETF based investing there, or if there is specific fund that invests in genomic revolution in the US, I will pick that. So from that perspective, I will pick something like ARC Genomic Revolution. So very quickly, let me walk you through the basic points. If you want to go and build an understanding about ARC Genomic Revolution Fund, you can read these three paragraphs. These three paragraphs are really good. I will link the article in the description box. So ARC Genomic Revolution Fund owns different set of companies. So the first set of companies would be sequencing companies like Pacific Biosciences. And what is it that Pacific Biosciences of California is doing? To increase sequencing accuracy and ability to spot more variants using long read sequencing. Now, without getting into the complexities, companies like Pacific Biosciences, they are acting as engines to genetic research. So they are improving the research capabilities. Second, this fund also has companies like Invitae and Exact Sciences, and they are building products that can screen for multiple cancers. Again, super important companies from that particular perspective. And finally, we have companies like Intellia Therapeutics that have made headlines recently using the Vivo in-body CRISPR gene editing to treat devastating chronic conditions. So these type of companies do DNA editing. So once I have understood the geography where I would like to invest, once I have understood some of my investment options, then I'll go and invest in that option in a sensible format. I will try to invest in these type of options when the prices are consolidating or they have taken shape. So right now, prices of ARC ETF are available at a lower price. So let me take you to Vested, and here you can see that in the last 6 months, the ETF has fallen by 34%. Right, that's one. Second, in the last 1 year, again, the fall has been 34%. So this has been a big fall in this ETF. I'll come back in a minute why the ETF has fallen. But here is a very good box formation that is happening for the last 6 to 7 months. So box formation means that the ETF has been trading sideways and it is consolidating after falling by roughly 33%. So therefore, this seems like a value buy for me. Now coming to the question that, hey Akshat, if genomics is such a big space, why has this ETF fallen so much in the last 1 year? The answer is fairly simple, that when COVID broke out, majority of the money flew to traditional things like medicine research, building infrastructure capabilities. So very few money was flowing towards innovative healthcare. From that perspective, innovative healthcare fund only gets released in the economy only when there is no imminent danger that the world is grappling with. So from that particular perspective, when the world starts returning to normalcy, what would happen is that this innovation money will start flowing towards innovative healthcare, and that is where you will start making good amount of returns from this ETF. That is my hope, that is my perspective. Definitely do your own due diligence before taking positions in it. So I have started to take little positions in it, and you can see me making a live investment here. Also, to get more understanding about ARC ETF's Genomic Innovation Fund, you can go read about it on Vested. They have broken down the exact mix of different companies that is owning. One important point that I would want to outline here is this list of companies would keep on changing with time because it's an ETF. So some companies will go out, some companies will come in. So that type of rotation might happen. That would be done by Kathy Wood's team, and that would be an expert decision. Since I'm not an expert in this decision, but I want to take advantage of investing in genomics, therefore I'm going the ETF route. There are very few industries where I take the ETF route, but this is one such industry where I don't know enough to make investments directly. So it makes sense for me to do ETF based investing on this. So in summary, on this video, we learned about the difference between real growth and fake growth, how to question the growth itself, if it is creating a genuine revolution or is it just a story that is being played out. And finally, if you don't know much about the industry, how you can still go and invest sensibly in it by doing your risk reward analysis. So I hope you enjoyed the video. Please press the like button and I will see you the next time.